Hello and welcome. This is the Market Wrap on Bloomberg Quint with me, Agam Vakil. It's been an end to another trading session where we've seen benchmark indices close with marginal gains, and an end to another series where once again it really hasn't seen too much with respect to returns. But to take stock of what's happening in the markets and where markets are headed with the kind of underlying fundamentals that the markets are poised with, we're in conversation right now with Mayuresh Joshi, fund manager with Angel Broking. Mayuresh, thank you for joining us this afternoon. Let me start off with the direction of the benchmark indices. What do you see? Do you see some consolidation moving forward, or do you actually expect it to give some sort of direction, say, over the next month or so?
Afternoon, Argam. I think the scenario that we're looking at this point is that Q1 numbers were very, very soft. That it was expected. GST pressures playing out consumers and investors, with the restocking effect having taken place in Q2. Again, I think this is something the market should really watch out in terms of for the overall indices. So large expectation 10% earnings growth for the better part of this year with a sharp recovery. So domestic factors are looking strong. The kind of what we've seen in GST returns and tax collections have been extremely encouraging at this point of time. And again, I think the RBI commentary specifically in terms to where inflation is heading in terms of their projected landmark figures, I think that should probably also have the markets probably swinging in terms of how these figures pan out. Yes, IIP and the other numbers in terms of PMI have been a little disappointing at this point of time. Private capex has not picked up and is not expected to pick up at least for the next few quarters meaningfully. But the government capex has been extremely strong. The government reform measures have been extremely strong. So I think the Indian economy stands out in that respect with the emerging pack. And as far as the global scenario is concerned, the US market seemed to be on a good footing. The housing starts there, the kind of GDP data that one really expects in terms of consumption patterns going up. And even with expectations of the trajectory of Fed hikes, I think well gestated by the markets. The ECB region is stabilizing. China probably still taking some time to recover, and that probably gains a leading advantage to India as an investment destination. The geopolitical tension is an outside risk, but that again, I think cannot be meaningfully played out at this juncture because liquidity remains extremely strong. So the markets might consolidate from a short-term perspective, but the overall view from a long-term perspective for the market still remains extremely positive. I remain extremely positive on the Indian markets over the medium.
Sure, Mayuresh. So, you just alluded to the fact that there could be some geopolitical risks out there, and we have seen tapering of fund flows in the recent times. What does that mean for markets right now? Because while foreign institutions have been selling, domestic institutions have been coming and countering that effect.
So as I said, I think the domestic liquidity is very, very strong. The kind of inflows that are happening through SIPs into mutual funds are humongous, and that is expected to continue. Yes, I think the geopolitical risk, it escalates. I think that can have a small pullback from risk on markets like equities, but does that necessarily mean that the risk of trade will start off and money starts flowing into bonds and gold? I necessarily don't think so. Again, I think a small component might in terms of allocation of assets across different asset classes. But at this juncture, as I see it, I think I see no reason why people should shy from equity. And at the same time, I think there is no other alternate asset class which is probably looking lucrative at this point of time. You look at the bond market, the kind of rally the bond market has given for the better part of FY16, for the first few months of FY17. One really does not expect that kind of movement to happen on the bond front. The FD market probably is very, very weak, rates coming down and not offering great returns on a post-tax basis to investors. And I said, unless something goes wrong awfully globally for geopolitical tension, you might see some action happening on gold as a safe haven asset. But till that point of time, my belief is that these factors will lend lending support to equities in general. So good quality names, I think where the earnings momentum has been strong across cycles and is expected to remain strong. can keep on continuing doing well.
Mayuresh, in your funds, are there any areas in which you are reducing your allocation right now?
We've been slower, Argam, specifically on the PSU banking space, very, very selective there. Again, I think we are underweight in terms of the telecom space as a whole, as well as selective capital good names. So I think the capex cycle, as I mentioned earlier, is still some time away, and the revival in the private capex will take time. Again, that will probably not help companies in capital intensive sectors because the execution again will be a question mark. The order flows again with the kind of margins that one expects can be very, very slow. So I think that is one sector that I'll be a little bit wary about in terms of the earnings momentum. And yes, as I mentioned, telecom and PSU banks, I think there still needs to be clarity on a lot of issues. For PSU banks, asset quality strain still seems to be very, very evident on their balance sheet. The capital adequacy for a lot of PSU banks in the mid and small cap space still remains extremely weak. So even in the scenario of a recovery in terms of credit growth,
Okay, Mayuresh.
the balance sheet expansion.
Oh, I'm sorry. Please go on.
No, so yes, I think the balance sheet expansion might take time. Again, I think telecom will typically see a very weak second quarter as it's seen. And again, the kind of numbers that are coming out both in terms of ARPUs and the stress that we've seen specifically in case of data ARPUs can continue. It is getting offset in terms of data volumes, but needs to be substantiated much more to probably create a positive EBITDA and cash flows, which will still remain under constraint for Spectre repayments and the leverage that already exists on their balance sheets.
Right, Mayuresh. So, my final question will have to do with opportunities that you see in this market in what sectors or segments or perhaps even some themes or ideas.
So again, I think selectively private banks will do well over the next 1.5 to 2 years. Selective NBFC stocks, which will include a few housing finance stocks, are expected to do well. There are a few stocks which are having a mix in terms of rural financing, wholesale financing, housing finance. I think a few of those stocks can do well. Abrasives and ceramics as a space is something that I'm liking. My own belief is that the entire theme of GST, of unorganized to organized, along with the kind of synergies that we are seeing from end user industries, will keep these stocks buoyant. The government focus in terms of spending on infrastructure, on terms of rural areas, specifically in terms of agri and agri equipments, as well as cement. I think these are the sectors that can do well with the government push through, both on affordable housing, roads, infra, power, ports. So I think selectively stocks within the mid-cap cement space should do well. Stocks within the power EPC space should have a good run into the markets as well. And a few selective themes within the fertilizer space where DBT is expected to get rolled out from 1st April. Before that, the subsidy payouts is what the companies are expecting the governments to give out. That can substantially reduce the leverage on their balance sheet. And with inventory levels coming down domestically and pricing at par with international prices, my own sense is that the earnings momentum can be strong for a few fertilizer companies.
Mayuresh Joshi, it was a pleasure speaking with you. Thank you very much for your time.
Thank you so much.